The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9 a.m. Eastern Time, Thursday morning. We got about 25 minutes to go until the opening bell. And yet again, folks, markets in positive territory. We had the S&P futures inching towards 4,100 this morning. Currently trading at 4,081. We're as high as 4,092. We get the NASDAQ charging higher. 13,711 on the NASDAQ 100. We're up a solid 0.8%. We get the Dow barely negative right now by about 23 points, trading at 33,306. And the Russell positive by 13 at 2232. Jumping around to commodities, currencies, Bitcoin getting a little bit of a lift right now, up $1,500. Quite the slide we had on Bitcoin from Tuesday above 60,000, Wednesday approaching 55,000. This morning catching a little bit of a bid, approaching 58,000 in Bitcoin. Crude $59.32 right now, down about 44 cents on the session. Gold continuing to catch a bid. Get the gold contract above $1,750 now. You check out gold, put it on a daily. Quite a pop we got from about that $1,700 level. Actually traded down to $1,677. We're trading at $1,753 in the price of the gold futures. Silver's up 35 cents at $25.60 this morning. And notes and bonds, we got a little bit of higher price, lower yield. We got weekly jobless claims this morning. And jumping over to the yield right now, you're sitting on a yield right now of 1.647%. Jumping to the economic number of the morning. Weekly jobless claims, a pretty high number, but all the rhetoric out there, all the analysis saying maybe this is a lagging number, maybe this is the number, the only number showing some negative action in terms of the economy. But man, it's quite a number. Weekly jobless claims coming in at an increase of 16,000 to 744,000 in the week ended April 3rd. It is really remarkable, folks, the transition of employees and how it's going. In terms of continually, you're seeing people having to file an initial jobless claim at a record-breaking pace, and we're now 13 months post-COVID restrictions being implemented. Prior to COVID, I believe the record for any week ever for weekly jobless claims was a number just under 700,000. I think it was 692,000. I have to peg that number and get it because I talk about it often. Nonetheless, I know 744,000 would be a record in any other year prior to COVID, in my lifetime at least, I think going back to when they have the data. But we see in terms of March numbers, non-farm payroll, we added almost 1 million jobs. Very encouraging data. But there is a cycle going through. Maybe it's people coming back into the workforce and then getting laid off again. Not sure what it is, but we're approaching on a weekly basis, continuing to see 700,000 plus people filing an initial jobless claim. Market shakes it off in a big way, though, as we are in positive territory. Tech stocks in positive territory coming in. The increase in claims shows the labor market still has a long way to go to recover the millions of jobs lost during the pandemic. I mean, if we're adding 1 million jobs in the months, but somehow we're getting initial jobless claims every single week of 744,000. We got some work to do over the next few months, folks. We're going to see how that plays out, but interesting nonetheless. And the market, it really just shakes it off. I mean, we're going to zoom back in on a 15-minute chart, checking out the action we had in the 10-year. We're pulling up the 8:30 acceleration. There's 8 o'clock. So this movement not really having to do 8:30. You can see not too much of a huge on the 10-year movement. You pull up the S&P, and we're currently sitting right where we were. You can't even tell that news came out. There is the news driver, weekly jobless claims. You're talking about the S&P barely moving a couple points, holding on to the positive gains we have in the market so far. All right, what else we got going on? Just going to jump to some of the tech stocks because we got tech stocks trading higher yet again. Amazon shares up from about $32.79. We're above 3,300 this morning. Man, I remember talking about Amazon saying the bottom of this consolidation, said we were down below $3,000. If you were planning a position for Amazon, trying to get into maybe some long-term positions on Amazon, might have been an area to dabble in at about 3,000, and now we're a solid almost 10% above that price level. Remarkable, the acceleration you get in a quick way on Amazon shares, trading at $32.79. Microsoft shares, look at that acceleration. We got 250 250 yesterday on Microsoft, and we're going to open today at 252. Microsoft shares continuing to charge higher. Apple shares 127.90 yesterday. We're trading at almost 129 today. Apple, really, we got two highs above where we're trading at right now in Apple. 145.09, the all-time high. You back it up to where we were in September. We were as high as almost 138 in Apple. So you're talking about $10 above where we're at right now. For Apple shares, we'll jump to some of the other stocks that have been on fire. Netflix, pretty similar, accelerating towards the higher end of this consolidation. Google, talk about a rocket ship, man. Google, 22.59. You're going to open this morning at 22.65 almost. Google continues to accelerate higher. Man, the run this thing has had, supposedly, remember when antitrust concerns were supposedly right around the corner on Google? Yeah, Google's up about 50% since then, folks. I think they'll be okay in a big way, to put it lightly. All right, what else we got going on? Jumping around to some of the headlines we got this morning. GameStop, why not? Wouldn't be a morning in the markets without a GameStop headline. GameStop, you got Ryan Cohen, the founder of Chewy. He's kind of the one that started all of the hype around GameStop. He's going to be chairman of the board. He probably deserves that title for everything he's doing for that company in terms of trying to turn it around from a brick and mortar company to a focus on online, pulling over the article on GameStop. GameStop slightly higher this morning. They announced that the co-founder of Chewy, Ryan Cohen, he's going to become the chairman. The change is expected to take place following the company's annual shareholder meeting scheduled June 9th. So you're talking about a couple months from right now. The manager of activist investor RC Ventures, invested in GameStop in a big way last year. I mean, geez, the returns this guy must have, a lot of people, but getting into GameStop last year, don't have to find the point in the chart where he got in to do the math on how much potentially he made buying quite a position when GameStop was ticking anywhere. I got $3 on my chart going back to all the way to April, let alone just going back to where we were to end the year 2020. You were sitting at $20 still. The run really began on January 13th. Right? We're trading at April 8th. Quite a few months it's been. The hysteria involved, but GameStop trading higher this morning, 185.31 for GameStop shares. And man, zooming in on the action, there's your 15-minute. There's the acceleration from 175 to about 185 right now. You pull up the Analyze tab. Are they going to give us a print right now? Yeah, we're dealing with a market cap of GameStop about $13 billion. Not sure they're worth $13 billion right now, but that's what the market's saying they're worth. So that's what it means they're worth, because the market's never wrong, folks. You might think they're wrong, and they might be wrong in terms of different in the long run. But, man, as we're seeing with GameStop, if you ever said that GameStop could maintain a price point of about $200, I don't think a lot of people would have thought that was possible when you were having the hysteria around GameStop at $483. Remember when GameStop was just trading at like $50 and everybody was saying, oh my goodness, it's bonkers. Well, yeah, folks, the market can be irrational for long periods of time, much longer than you might be able to stay liquid or in a position. We should all be learning a lot from the mistakes of some of the brilliant traders out there, whether it's the Archegos saga going on, that's still playing out. Credit Suisse, who knows how those jobs are going to play out. Many executives being replaced. Not sure how the chief executive, even new in that role, keeps his job at Credit Suisse, considering how dramatically they failed their risk sector with that Archegos saga, losing approximately $5 billion, while many of the other banks in Wall Street sold off their positions almost 5 full days, almost a full week ahead of Credit Suisse selling theirs. All right, folks, stay tuned. We're going to be talking to our man Kevin Hinks when we come back from the break. We got S&Ps up by 10. We're looking at a record open, folks, in the S&Ps, 4,080, 4,100. It's right next to where we're trading at, folks. Stay tuned. Give us a call, 877-927-6648. We'll be right back, folks.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up by 10 points, looking at a record open this morning. We were as high as 4,092 overnight. You got the S&Ps up 11 points right now, trading at 4,081. Tech stocks, we're pushing right up near the all-time highs, folks. 13,715, within about 200 points of that 13,900 print in the NASDAQ 100. That's after trading all the way down to 12,200. How about a 1,700 point move from, you're talking about really just February 16th down to low March 5th and right back near those highs, folks. Let's jump over to our man, Kevin Hinks. Folks, every trading day, 11 a.m. Eastern Time, live on Tiger TV, Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team at TD Ameritrade Network breaking down the markets, talking about hypothetical trades. Folks, the best way to learn is going over real trades, hypothetical trades, seeing how they manage them, trade management, right? Getting in, getting out, the whole deal. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, there's not much really to go over this morning in terms of economic data. The jobless claims were a little bit higher than expected, but the market looks like it's more or less shrugging off that data. I mean, we were looking for something in the 600 level, around 680,000, came in 744, a little bit of a head scratcher. But overall, I think this market is looking at a bigger picture, which is an opening U.S. economy, and with interest rates and yields kind of stable here around 165, and gasoline or crude oil prices stable here around just under $60. This market looks pretty healthy right now, and I think the NASDAQ is reflecting that, Tommy.
How about those tech stocks, right? Talk about doing away with a pullback, man. No such thing right now in the tech stocks. And how about the VIX, Kevin? We got a 16 handle of the VIX. We're back to basically the historical average. I know that from listening to you, the team at TD Ameritrade Network. The VIX, we got a historical average about 16. Remarkable that we're back down with 1655 right now. And touching back to that weekly jobless claims, because it is interesting, Kevin, and I mean, talk about so much is going to be written about the markets and the world we're living in over the last 13 months and over the next few months as we get out of this thing. But the amount of uncertainty, Kevin, in this market right now for a trader, I look at it. Sometimes it's very easy for the market to figure out whether it's multiples, whether it's growth rates of technology companies, whether it's how the market values that growth rate in a multiple of their earnings, et cetera. And of a time where continually we're seeing almost, now we're over 700,000 again on the weekly jobless front. And I think it just kind of speaks to what you're saying. The market shakes it off in a big way, man. Didn't even budge. We got the S&Ps almost right where they were. Tech stocks don't even move. But my mentality, Kevin, when I look at it as a trader, right, many companies, especially you guys are always looking at earnings plays. I love those trades myself, using options during earnings, capitalizing on the volatility. One of the things that's so remarkable is so many companies right now, there's so much uncertainty, right? Because what they did in year 2020 might not apply to what they do in year 2021. And I think we're going to see that play out as we come into earnings season, kicking off banks in a big way next week. But then, like you talk about Redbook, right? You talk about retail sales, man. It's going to be so interesting to see how these companies come out and how the market really values that versus what they're looking at, what they've done over the last 3, 6, 9, 12 months even.
Yeah, and that's what you may be seeing in some of these tech stocks. Because remember, we're about a week away from the beginning of earnings season. And, I think a lot of traders and a lot of money managers are looking at some of these tech stocks and the corrections that some of them have had. Apple got from 145 to under 120. Well, it's bounced back because people are looking at making bets based on first quarter earnings, and suddenly all these tech stocks, DocuSign, right? That name has been much maligned, but guess what? It got upgraded today with a big number, so it's looking higher pre-market, about $3. So it looks like all the tech stocks that were so maligned for days and weeks during the first quarter have now come back into favor. That's why you're seeing the NASDAQ leading this market higher, up 0.8%, Tommy.
I mean, remarkable where we've come from. You had Amazon down at 1,600 and change at the lows of last March. And the world changes pretty dramatically, man. And I talked about it when we had Amazon down just a month ago, Kevin. Amazon was trading with a price point of a 2,800 handle. This morning, we're going to open with a 3,300 handle to kind of speak what you're talking about. We've had some severe consolidations on some of these companies that really got ahead of themselves early in the pandemic, rightfully so, when the market figured out there were going to be winners and losers of restrictions and shutdowns. And you're seeing it across the board. Microsoft, man, my goodness, we got a 252 print, let alone Google. Talk about not worrying about antitrust fears. Google, I don't think they ever had a pullback besides back in September. You're talking about 2265 on Google shares today. And NASDAQ 100, we're within 200 points of that all-time high. It seems like that's the next stop that it might be running towards. What are you guys going to be talking about on the program today, Kevin, as we wait for next week with really earnings season to kick off with those banks?
Yeah, topically, it may appeal to some of the younger watchers, but in terms of investing, it's always good. We're looking at EA Sports, Take-Two, and Activision today.
Nice.
So the gamers are coming on to Fast Market today.
I love it, man. You guys were talking payments yesterday. You're going to be talking gaming today, both exploding segments. And, interesting, I got to tie it into GameStop. Of course, they're trying to transition to the online world from the brick and mortar. They got Ryan Cohen. He's going to be chairman. I said that kind of makes sense with everything going on with what he's put into that company, and he's been the driver behind that. But it is remarkable, the changing landscape, Kevin, of games and how they take place. When I was a kid, you had to go buy the console, right? A Nintendo, a Sega Genesis. Nowadays, man, I got an iPhone 12 that can do just about anything on my phone. Don't play as many games this time. My game is the market at this point in my life. But yeah, these companies, man, they've been rocket ships. And we look forward to the conversation, man, because like we talk about, volatility is here, and these GameStops, gaming stocks, there's a lot of volatility in how that world, anytime an industry is rapidly changing, right, Kevin, there's volatility, which is a trader's best friend sometimes. So we look forward to the conversation, man. Folks, right here, every trading day, coming up in an hour and a half, 11 a.m. Eastern time. Kevin, man, we look forward to the program. You have yourself a great weekend, and we'll talk to you next Tuesday.
Happy Masters weekend, Tommy. Have a great day.
Oof, gotta love it. We got Masters. We got everything cooking, baby. All right, Kevin, take care, man. Folks, that's right, the Masters. Gotta love it. I saw them. They're out at the practice tees out there already, some practice rounds. We have the NCAA tournament. It's remarkable that you're getting that feeling, folks, that the world's coming back to normal, and it is a beautiful thing to think about. People getting their vaccines, right? My mom's got her vaccine. She's out with her mom, my grandmother. They're out in Boston, right? And I'm almost joking that they can go party all they want because they're vaccinated. Now you can't. You got to be careful. But for people who are high risk, so much of the last year was spent being really closed off to so many things you wanted to do. And there's a real feeling as these vaccinations roll on that you can get out there, you can do what you want to do in a big way. We get the Masters coming up. You're able to see friends, you're able to see family as these things roll on. And as Kevin spoke to, I think that's a big part of what's going on with why this market just continually shakes off the weekly jobless claims. What is going to be interesting is to see the aftermath and how things get analyzed to figure out why right now, because I don't have the exact answer, and I don't think anybody does, right? Everything's just your own personal opinion. It's all just conjecture and bias and your own personal opinion on everything. But how does the economy continue to have almost 700,000 people on a weekly basis filing an initial jobless claim at a time when on a monthly basis we're adding almost 1 million jobs and we're coming out of COVID? Be interesting to see how that breaks down, who those people are, and whether they're coming in, coming out, or whether we get them back into that workforce. Stay tuned, folks. We'll be right back when the market open. Give us a call. What are you looking at this morning? We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We get the S&Ps up by about 12 points right now, holding pretty steady where we were pre-market. NASDAQ 100 up about 110. You get the Dow barely negative by 10 points right now. Bitcoin, as I mentioned, catching a little bit of a bid back near 58,000. We got crude negative by about 40 cents at 59.31. And how about gold continuing to rise? Gold A little bit biased. My dad, he's got his gold report, but man, we're at an area, you're talking about a bump to the upside, and this might be that area we were talking about many times. This is a 3-year weekly. This we had a run from a low of 1450 to 2089 for the COVID lows of March, all the way to the highs made in August. We backed down to a 618 retracement. That price level about 1695. You can see we got a couple tails on a couple of these bars below that price level, but we held pretty steady. This area was support going back to where we were from April all the way to June last year. We hold that level yet again. I mean, look for that bounce. If we hold this level, you're talking about 2089, folks. Markets love to go down. They love to go up. Next level we might test, you're talking about maybe it's January 4th that week. We had some volume there, quite the acceleration. The low of that bar, you're talking about 1827, folks. That's a solid $75 above where we're trading at right now in gold at 1753. And notes and bonds jumping around. That's your 3-year weekly. 131.29. We're higher off the lows. We had a low print of 130.25. That's a weekly this week. And there's your run, 130.25 from Monday. And look at that. We're up more than a full point from where we were just on Monday trading. We get the yield right now down at 1.65%. All right, what else we got going on? Jumping around to some of the action out there. We got to talk about vaccines, folks, because that's what's driving a lot of this acceleration. I encourage you. I've gotten my vaccine. I got my second shot coming up in 5 days from right now. If you are still waiting for your vaccine, be safe out there, folks. Social distance, wear a mask, get the vaccine if you have the availability to do so. It is safe. It is effective. But there's some cases, and it is still spreading. We're not out of this yet. Michigan, they got quite a spike going on right now. New confirmed cases of COVID-19. When you compare it to New York, New Jersey, and Michigan, Michigan is about to spike over where we were in December. Look at that acceleration, folks, from the middle of February in terms of this is cases per 100,000 residents. You were down at 10. You're 6 to 7 times where you're at that level. So it is encouraging to be so close to the finish line, folks, but we ain't there yet. So please, if you haven't been vaccinated, if you know somebody who's high risk, especially, right, be careful till you get over that hump. In terms of vaccines, quite the number. We're at 171 million doses in the United States. Almost 200 million doses. And guess what? We'll be at 200 million doses in about 10 days because we're doing 3 million doses a day of remarkable acceleration. Globally, we're talking about 704 million doses in a big way. It is coming, folks. It is encouraging. The summer looks to be quite a summer of normalcy. And man, normal would be quite a euphoric feeling right now because it's not going to be normal, folks. You take for granted many things you have in life. And I think we all learned that over the last year in a big way. All right. Talk about taking for granted. How about taking for granted you're worth $20 billion and within about 48 hours you're worth $0. Bill Hwang, man, had $20 billion, then lost it all in 2 days. Remarkable. So Hwang, 57 years old, had built this up as a trader. And, you know, traders love margin, folks, especially when you see some of these hedge fund traders out there. We saw the saga with GameStop in terms of highly leveraged short bets in stocks that were shorted to the tune of 140% of the available shares. And now we see Hwang. I mean, he had his wealth briefly eclipse $30 billion. Folks, what are you doing having all your money if you're worth $30 billion leveraged up 6 to 7 times to 10 times your equity and just plowed into stocks that might turn around? I mean, it's just, you can't overstate it. I've talked about it before. Folks, you should always learn from your own mistakes. Pay attention to this because greed is a human emotion. We all have that emotion. And it almost seems inconceivable that you could be this foolish and be this brilliant in the same way. Obviously a bright individual, Bill Hwang, to build a $30 billion net worth. Obviously foolish, to put it lightly, to put all of that at risk in the span of literally a week or two. Unlike Wall Street stars and Nobel laureates who ran long-term capital management, would blew up in '98, he was largely unknown outside of a small circle. He stayed under the radar. And man, March 26th, investors around the world learned about Archegos. They learned about Bill Hwang. They learned about his $100 billion portfolio. And they learned that he was about to lose it all and that he lost everything plus some. And the banks were going to lose about $4.7 billion for Credit Suisse. They've been the headline. Nomura Holdings had about $2 billion. Looks that Morgan Stanley was the first one out of the gate to sell off their position. But, man, it's remarkable. Bloomberg with a great article out there. If you have a chance to check it out, I would. his banks were pleading with him to sell these positions in the days ahead, maybe to save himself. And he got stubborn, folks. He got stubborn, and it's got to be tough to close out a trade where you're going to lose billions upon billions upon billions of dollars. He chose the route of running the risk and staying the course, and staying that course meant he was risking everything, and it ended up not working well, and he lost it all in the span of about 2 days. But remarkable when you look at it's now $20 billion that they're putting it at, that he was at. He was up to $30 billion at one point. It's just remarkable and unfortunate, because a lot of good could have been done with that money, and it just vanished in air, folks. That's what can happen when you let greed get the best of you. All right, what else we got going on in terms of some of the stocks with action this morning? We talked about GameStop. We got Box, the cloud computing company. How about $500 million investment run by KKR? The fund's there. They're putting that money in. Box, the cloud. Talk about a big one. Now, look at that, though. You go up to 26.34, and just like that, we're back in a big way. Box, you put this thing on a daily, we're back to basically just where we were trading at on March 19th, but the market pulling back on their news that they have convertible preferred stock, which is the big deal there. So you might see a little bit of a dilution. WW used to be Weight Watchers International, still really call them Weight Watchers. I don't know how they play that game. They're called WW, yet they use the term Weight Watchers in their commercials still. I don't get it. But nonetheless, they get a downgrade to equal weight from overweight at Morgan Stanley, noting its significant outperformance over the past 12 months. The shares of the company formerly known are now within 5% of the price target. WW is their symbol. And there you see the drop-off to about $29.42. We were at a low of 17 back in September. We were as high as $37 recently. They get a downgrade from Morgan Stanley. Conagra Brands, they're out with their numbers. So they earned 59 cents a share, a penny above estimates. Revenue topped as well. They continue to see elevated demand stemming from more people staying at home during the pandemic. Going to be really interesting to see how our tendencies change. We all know that we're cooking a lot at home, right? We're spending more time at home. We all know the next year is going to be different. We're all going to be trying to get outside. We're all going to be trying to party at restaurants, right? I'm exaggerating a little bit, but not really. But when normalcy returns, what does that look like? That's what the market is going to struggle with so much, folks. When normalcy returns, okay, when we get out of the pandemic ridiculousness, when we get out of the euphoric year that we have coming up, that everybody wants to do everything they weren't able to do for that entire year, and we return back to a normalcy, what does that normalcy look like? How often are people going into the office? How often are they cooking at home? How often are they eating out? How often are we watching Netflix, Disney Plus, etc.? It's all up for grabs, folks, and the volatility with some of these companies is a trader's best friend. Now you get the VIX. We're back up to 1710, which is interesting. What's the deal with that little spike on the VIX? What happened to 1655? But still, relatively low volatility when you think about how much uncertainty we have coming in the next few months, folks. Stay tuned. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the S&Ps positive by 7. We got the NASDAQ positive by 124 and the NASDAQ 100. Look at those tech stocks charging higher. And, folks, coming up next, we got our man Basil Chapman. Check out the front page of TFNN. 1 week from today, Basil's going to be doing a webinar for his subscribers to the opening call, dressing up the charts in the Chapman wave. Folks, this is going to be a great webinar, 90 minutes. Basil's going to be in there basically just charting the whole time, showing notations over and over and over on a number of different charts. You can sign up for the opening call. If you want, you can even email Basil. As he says, questions on chart patterns can be pre-sent by subscribers to basilchapman@tfnn.com. You can be in there live for the webinar, talking about what stocks you would like Basil to notate on. He's going to be doing it over and over, as he says, to show you the best way to trade with his opening call methodology, the Chapman Wave. Check that out on the front page and stay tuned. Basil coming up with his program live at 10 o'clock this morning. Folks, I got to wrap it up there. Got to wrap up a little bit early today for my program, but stay tuned for Basil coming up live at 10 o'clock. And we're just going to jump to a little bit of a replay here just for the next few minutes till Basil jumps in at 10 a.m. I appreciate you tuning in, folks. I appreciate you joining me to start off the day at 9 o'clock. Have a great day. Have a safe day. And stay tuned, folks. We got our man Basil Chapman. He's coming up live next at 10 o'clock. Thanks so much, folks.